What's up traders? Multi-time frame synchronization. This is the topic that we will be dive deep into in today's video. But before I begin, let me ask you a question. What if you give a 3-year-old kid every single hour to learn different alphabet? Say first hour A, second hour B, third hour C, like that. After one day, if you tell the kids to recognize any of this alphabet, then what the kid will recognize is something like this. Similarly, when we sit in front of a trading chart, our brain recognizes the chart in the similar way like a kid. So if you are jumping from one time frame to the other time frame, like today trading on 5 minutes, tomorrow 15 minutes, after tomorrow daily, then your brain will recognize the chart exactly the same way as this 3-year-old kid. Remember, trading is all about understanding the pattern. Now, if you see a head and shoulder or double bottom, double top on a chart, everyone can see and everyone can recognize it. But the real trader are those who can see the chart before it develops. And to do that, your brain need to understand the pattern in the chart. So in this video, I will show you step by step to create a multi-time frame synchronization in your brain to predict the price movement with incredibly smart and accurate way. Sound interesting? Then smash the like button. I am Forex Wizard. If you are new to the channel, hit the subscribe button, press that bell notification so that you don't miss out any of the wizardry that I post like this one almost every day that will change the way you trade. I will be right back just after a small intro and disclaimer. Let's dive into this topic. I'll take you to the chart. Now let's first understand what it is. So the first thing is the primary time frame or a skin time frame. What does it mean? Remember, when you are trading, when you're opening your chart, which time frame you will be looking? You will be looking at 5 minutes, 10 minutes, 15 minutes, 1 hour. What is the time frame that you will be looking at? This is the first question you need to answer. Now, I cannot tell you what is the best time frame for you to look at. You need to find that answer for yourself because everyone has a different choice. But you need to find out what time frame is best for you to look at first when you are opening the chart. Say for example, if you are a swing trader, you might be able to look at the 4-hour or 1-hour or daily chart. If you are a scalper, you might be looking at 5 minutes or 1 minute chart, or a day trader, you will be interested to look at 15 minutes, 5 minutes, no matter which time frame you are looking at. But you need to master only one time frame all the time. This is the crucial point. Remember, which time frame you are looking at is not important, but whatever you are looking at, you need to master that one time frame. The reason is because, remember, every time frame has a different types of pattern. Though the head and shoulder, double top, double bottom is common in every time frame, but each time frame creates the pattern in a different way, as our brain might get confused if you jump from one time frame to other time frame all the time. So you need to master one time frame so that your brain can understand this time frame properly and very, very effectively. This is the first point. The second thing is, this is the time frame that you will watch all the time. When you watch, as to become a trader, you need to spend a lot of time in front of the chart. Remember, it's very, very important to become a trader. You need to give time. and you need to give that time on a specific time frame all the time, so that your brain can understand, can read that pattern. The next thing is, with that time frame that I'm talking about, it could be 4 hour, it could be 15 minutes, but specific time frame that you will be using for taking signal or taking entry in your trade. That is what I call a primary time frame. You can note down or you can watch this video over and over again to understand what I am teaching. This is the real stuff to become a profitable and professional trader. Now this is the first thing for the primary time frame. The next thing is secondary time frame. Now what is a secondary time frame? Let's understand it. The secondary time frame is what I call a supportive time frame. So what does it mean? It means that, say you are trading on a 4-hour time frame or 1-hour time frame. If you are trading on a 4-hour time frame, that means if your primary time frame is 4 hour, you can use higher time frame. That means this secondary time frame must be a higher time frame than the primary time frame. That is what I call a secondary time frame. So if you are trading on the 4-hour, daily, weekly and monthly will be your secondary time frame, and you don't need to master secondary time frame because this time frame is your supportive time frame, but you need to master one primary time frame to understand it properly. Okay, so the other important function of secondary time frame is to give you confirmation of trends and levels. So what does it mean? It means that if your say primary time frame is 15 minutes, if you want to trade in 15 minutes, and if your secondary time frame is daily, weekly and monthly, then daily could give you a clear idea of the trend. So you will understand the trend from the daily time frame, though you are trading on the 15 minutes time frame, because the flow or the direction of the market will be determined by the daily time frame. So that is the purpose of a secondary time frame. Okay, so usually daily, weekly and monthly are used as a secondary or supportive time frame if you are trading on the lower time frame, such as on the 4-hour. But if you are using say 5 minutes or 15 minutes as your primary time frame, then 4-hour, daily, monthly and weekly can be your secondary or supportive time frame. Now you might be asking a question, now why do I need to know all of this? Now the main objective of understanding this, I will show you now in chart, but let me clarify why you need to know this, is to create a clear and predictable synchronization between primary and secondary time frame in your brain. Remember, to predict a market accurately, you need to be able to see the bigger picture. At the same time, you need to see the smaller picture, and you need to be able to synchronize between bigger picture and the smaller picture so that you can see clear direction in the market, and at the same time you can see which place to enter the trade, and that is the big part of your trading. Now let me show you all of this in the chart. What do I mean by this primary time frame, and what do I mean by this secondary time frame, and how you can synchronize them. Okay guys, so first let's consider this scenario on GBP JPY in a 15-minute chart. Now look at this chart here. First of all, what you see that there is a double top here. This is a clear double top, and after this double top, what happened? The trend didn't change much. It went up again and created another double top here. There is another double top here. Okay, and after that, what happened? The price looked like reversed, but again the price went up. So there are two back-to-back double top failed to reverse the price, and finally the price reversed from here, creating similar kind of double top. So what is the specialty in this double top that this double top doesn't have? Now if you are trading only on the say 15-minute chart, and if you are not looking at anything, then you may not be able to spot this double top is going to be a reversal. Now let's approach in a different way. Let's go to the daily time frame and see what's happening here. Now let's see on the daily. Now what you saw on the daily, what you saw on the 15 minutes, a completely different picture on the daily. What you saw, the price starting from here, creating a trend, series of lower high and lower low. This is a typical downtrending market structure. Now what happened here? Let's draw all the levels where the price is testing the previous support as a resistance, because when you see a downtrending market, you can see that previous support tested as a resistance. So there is a support here, tested as a resistance, there is a support here, tested as a resistance, and there is a support here, tested as a resistance. So this is the basic market structure. Now when you draw this level on the daily time frame, now go back to the 15 minutes time frame. Now what you see, now you have a clear idea why this double top was significant. Now look at this here. Everywhere there is a double top, but this double top is very, very special, because as you see that this double top is formed in the previous daily support as a resistance, and that is what is important for you when you are trading on the 15 minutes to go to the higher time frame. So according to our explanation, now if your time frame is 15 minutes, if you want to master 15 minutes, then 15 minutes will be your primary time frame, where you all the time watch the chart, take your trade based on this double top, take your entry or signal based on the pattern is developing, but you will keep this level on based on daily time frame, which is your secondary time frame or a supportive time frame. Now this supportive time frame is giving you direction of the trend. As you see that when the price was moving from here, what you see that this is an uptrend, clearly defined uptrend, but you know that from the higher time frame, this is basically a downtrending market, and at any point the price may reverse. But when it is reversing is where there is a high probability. When you saw that the price, when they are tested this daily support as a resistance, that's where you can say that this price may reverse with high probability. Now this is how you will use secondary time frame for your primary time frame, so that you can clearly synchronize in your brain which way the market is heading and what way to enter a trade. Now another important thing is, as I told you, that you need to master one time frame at a time. Now the reason is because you will see that this kind of pattern is seen mostly in 15 minutes, a big candle up, creating a double top and immediately going down. You might see in other time frame as well, but mostly you will see frequently in 15 minutes time frame. But if you are trading on the 4 hour or maybe on the daily, this pattern may be less common. You might see more of a pin bar, more of a shooting star on the daily than a 15 minutes. So that's what you need to understand. That is the reason why you need to master a specific time frame to become your primary time frame. Now let's see another example on the higher time frame. But another important aspect of primary and secondary time frame is that when you are trading in a specific time frame, remember, you don't have to look at the lower time frame than what is your primary time frame. Your time frame, your secondary time frame will be higher than the primary time frame. What do I mean by this? Say you are trading on the 15 minutes, you never have to look at the 5 minutes or lower time frame, but you need to look at the higher time frame for confirmation of your trend as well as the levels that you need to look at. Now let's see one more example on the higher time frame. Okay, so let's look at this example on Aussie dollar on the daily time frame. Now what you see that there is a very nice double top here. You see there is one green candle up, one red candle down, one green candle up and one red candle down, creating a nice double top with a bearish engulfer on the right side. Okay, after that one candle went down and immediately the price reversed. That means that this double top may not give you an expected result. And after that, what happened? You see another bearish engulfer, clear bearish engulfer, and again the price reversed. And finally, after this small red candle, the price finally reversed with a big speed. Now when you are trading only on daily time frame, if you don't look at the secondary time frame, if your time frame is daily, if it is a primary, then why you will not know why this level is so significant, why the price directly reversed from here with a high speed. Now let's jump on to higher time frame. Let's see on the monthly time frame. Now on the monthly, when you go to the monthly time frame, then it makes sense to you why this reversal on the daily in this zone is so significant. Now what you saw on the monthly time frame, look at this. You saw that, so it is a clearly defined head and shoulder. Now if you go to the weekly time frame, you will see this head and shoulder. What you saw there is this is the head, left shoulder and right shoulder. Now what happened on the monthly time frame? When you see a head and shoulder like this, you almost 80% can be sure that the price will go up, test this previous support as a resistance before the price finally reverse. And because AUD USD has created a reversal pattern or a head and shoulder on the monthly, we can expect this price to come here again to test this support as a resistance. And this green candle is what has exactly done. The price came here, tested this previous support, as a resistance with this green candle and closed here. Now when this candle is closed, that is when the daily candle is formed. You see, this is the date on the 1st of November this doji is formed, and this is the single most reason why this daily reversal is so significant in this area. And it is not significant in this area because it is not synchronized with higher time frame. But when you saw that monthly tested a reversal pattern, a head and shoulder, and when you go back to the daily, then you can see a clear pattern on the daily. Now this is the single most reason why you need to keep a primary time frame to master. So when you master a daily time frame, will tell you that there is a reversal pattern here to trade it. Now go up to the daily time frame or weekly time frame or monthly time frame to see further confirmation. When you see that on the monthly there is a support is tested as a resistance, at the same time I have a reversal pattern on the daily time frame, this is a perfect trade to take. And that's how you can synchronize primary time frame with the secondary time frame to have a clear, predictable, high probability trade signal to become a successful, profitable trader. Now one important question may be asked by who you are trading on the lower time frame, such as 5 minutes, 1 minute. You might be asking, well, then I will always jump on every time 4-hour daily or monthly time frame when I'm trading in the 1 minute. How can I do that? I don't have time. Now you don't have to click all the time monthly, weekly to see. The simple trick can help you. What you can do is, that's how I used to do when I used to trade on the lower time frame, such as 5 minutes, 1 minute. There was a time when I traded in that time as well. So what you can do, say when you are trading, say for example 1 minute time or 5 minutes time, first say if you want to trade on the Aussie dollar, go to the daily time frame. Now draw the level quickly. Say for example you are trading today, this is the running chart. This is the important daily level. Draw this level, put the line on it. This is another resistance, and say this is support level. This is the daily high. Okay, now you got the lines. Now go to the 1 minute time frame. So if you want to trade on 1 minute, go to the 1 minute. Now you have all this level drawn on your chart. Okay, you have the level. See, now you can understand when the price approaching this level. You saw this dotted line is basically a daily important level of resistance. So when the price was coming, you don't have to worry that it is likely to go up. But when the price came to this daily level, immediately dropped. Again, the price came to the same level. You see there is a lot of narrow candle, created a reversal, and then immediately reversed from here. So if you are even trading on the 1 minute, you can keep the level on your chart so that you can understand where the pitfalls are, where the price may bounce or may create a reaction from this chart. I know that many gurus might tell you, okay, you are trading on the 1 minute, you can only look at 15 minutes, you don't have to look at the higher time frame. Remember, when the price bounce from a monthly level, it will bounce from everywhere. It will bounce in the 1 minute, it will bounce in the 5 minutes, it will bounce in the hour. So no matter what time frame you are looking, you have to keep eye for any level developed on the higher time frame by this way. Even you can draw the weekly chart by doing different color coded line and writing down which line is for what level, so that you can have a clear idea of which way the market will be heading. I sincerely believe that this video was helpful to you to give you a clear idea on how to synchronize a multi-time frame in your brain so that you can predict and determine the clear direction in the market. Thank you for watching. See you soon. Don't forget to subscribe and drop a comment below. That will be helpful for YouTube algorithm.